Another company just got bought out for over 200% premium. Look at this. UGE International. Look at this. How the stock just ripped from 54 cents to 180 in 1 day. 1 day. Here's the press release. US UGE International enters into an arrangement agreement for going private transaction. And in this press release, it says that the consideration represents 270 premium to the closing price. I'm telling you, the private equity knows that they're getting deals. Stupid retail doesn't know anything. So now, let's take a look at some of these things. Let's take a look at the market cap as it shows today. 60 million. You might think, man, they must have a lot of revenues. They must be profitable, because if you're not profitable, you're not worth anything, right? Accountants, if you're not profitable, you're not worth anything, right? 60 million. 60 million. They must also have a very good balance sheet, have no problem with debt, anything like that. 60 million. Okay. Here's the income statement. Look at the revenue. $1 million of revenue. Look at the gross profit. And I am not criticizing. I am pointing out the facts. $1 million of revenue in 2023. Gross profit was only almost 700,000. General and administrative alone were $12 million. The company lost $14 million in 1 year, and they just got bought out for 60 million. Yeah? Okay, let's look at the balance sheet. Not a lot of cash, 2.4 million of cash in the bank, some plant and equipment. Let's look at the debt. Current portion of debt, $10 million. Current liabilities, $20 million. Current assets, only 5. So current liabilities are a problem, right? Because they are 4 times more than the current assets. What about long-term debt? 45 million of debt, long-term debt, plus 11 million of current debt. So we're talking 55 million without counting for the current portion of lease liabilities. 55 million of debt, 1 million of revenues, losing 14 million a year, and they still got bought out for 60 million. And the price, this price here, that's just for the equity. Whoever is buying this is assuming the debt, right? So in other words, the entire enterprise was bought for $100 million, and it only makes 1 million of revenue, right? What kind of lesson do we learn from this? Is that by looking at the financials, without knowing and understanding the value, synergistic value to others, you know nothing. You know nothing, okay? And if we compare this, we can compare this to, for example, Voxter. They have more debt than Voxter. Voxter has like 40 or 50 times more in revenues, right? And people are crying over 20-something million debt in Voxter, right? This company actually, what they do is they have solar projects, okay? So in a way, it's comparable to Charbon, where they have certain projects, right? But now, there's a lot of value, okay, within a company like this. And that value, in order to be unlocked, it needs growth capital, okay? If the retail investors are trashing it, saying that it's not worth it, okay? Somebody else is going to come and steal and provide that growth capital and benefit from the future growth, right? So don't be surprised if a huge buyout like this happens on other companies, even our companies, okay? It might happen. Don't be surprised if maybe Charbon gets acquired by multiple times the current stock price by somebody who has a brain, who can see the value, how to unlock it, right? This is just what happened here. Private equity knows. They're not looking at the financials like this and crying. They know the value, synergistic value. They know when they bring in capital, it's going to unlock huge value, okay? So that's just an example. In one day, something gets bought out by private equity that understands what's going on, and they take it from retail that doesn't.